Good morning and welcome to the new episode of Dr.Lamba's Awakening Call. We find that as the year ends, the alarming signs coming from all over the globe, and they are especially bad regarding the economic and political scene. Let's take the economy. The debts all over the globe are rising to the extent that they are hurting. When borrowing becomes pricier, risks bound are always there, and especially for the over-leveraged consumers, over-leveraged companies, and the countries. And that is sorry state of affairs. We have seen that the world is emerging from the cheap money era with a mountain of debt, and that's getting painfully expensive. Today, the total debt owned by the households, businesses, and the governments is $290 trillion. $290 trillion. A decade ago, it was one third. So in just 10 years, it has increased by $200 trillion, and that shows that there is something wrong. No, there is a lot wrong with the economy of the world. And amazingly, the world's debt has decreased because of the pandemic-driven record this year. But still it's so high that it's in fact a red signal for economic and financial markets. This is because many borrowers now face a relentless increase in interest payments. And we find that the central banks are increasing the rates every few months. Federal Reserve, Bank of Canada, name it, and each country's central bank is raising interest, and the pace is too much. The plea taken is that it is to subdue inflation, maybe, but way to the hell is paved with good intentions. In 10 years, this addition has of the debt, making it $290 trillion today, is something not to be known. You see, unfortunately, what happened? Many loans were locked up when the rates were low. So the bills won't come due all at once. But when the bills come due, then there'll be a squeeze. Even now, at a minimum, there'll be a squeeze on the economies, especially the developing countries, with the cost of living indexes almost in a crisis. At worst, something in the global financial systems may break. The recent history is rich in examples of a large debt that had turned, for example, the Japanese corporation in the 1990s to the US homeowners and the European government in the following decades. So we have seen that happen. And as the higher debt payments begin to sustain personal, consumer and companies, just like the governments, at some point you are going to be watching creeping up, and all of a sudden it's going to blow up in your face. And that will be too late. And don't forget, the interest rates are soaring and they are about to get more expensive. A measure of the world benchmark, central bank, is weighted by the size of the economy. The higher, the better the economy, the more the interest rates are. But then there's a paradox. The paradox is that the rich countries can generally afford to pay more interest on their government debt for a while. But the investors, especially from developing countries and countries like Italy and UK, for example, they suffered a bond market scare a few years back. Then the biggest is the housing debt that dominates the consumer's balance sheet, so that here the dangers are the biggest. There's a particular mix of ingredients, and our economists ignore those list of ingredients that identify the places where the trouble is brewing. Canada is one of them. We have seen the countries which has dodged a housing or a banking crash in the Great Recession. But the households keep adding debt instead of paring back and have a large share of floating rate mortgages. Now, this option of floating rate mortgages is good as long as the economies are on an even keel. But when the economies jump up, gallop, then the higher central bank rates are rapidly transmitted to the borrowers. And the best example of that is Canada, Australia, and South Korea. The result, consumers like you and me are going to be squeezed as a larger portion of the household incomes goes to the payment of debts. There will be less money to spend on other things. So projections based on the acceptable interest rate are peaking. Just think, go back to the big short. Basically, people or a group of investors, they had got rich by using the submarine mortgage collapse. So they were trying to reset the borrowing cost. But this isn't the ticking bomb. It's everywhere. And I'm amazed. For example, there is a Toronto-based real estate lender, Rompson Investment Corporation, and they informed me that they have halted redemption on their largest mortgage funds after a number of borrowers stopped making payments. And when the people stop making payments and the funds halt the redemption, then something is definitely wrong and it needs revolutionary changes. Now, among the ranking high on the list of the European countries, UK, for example, the interest rates on the most mortgage reset after 2 or 3 years. And now debt payments are on track to exceed 10%. In Netherlands, Sweden and Norway, they are already heading towards 15%. Homeowners in Asian countries like Korea, Malaysia, Thailand, they have to pay 25 to 30%. So the businesses outside the finance industry are neck to neck with the government as the biggest borrowers of the cheap money. They wanted to set up the project, so they went to the banks, got the money, but then the interest rates started picking up. And IMF is right that the printing of the money is no way out. This year there has been a surge in borrowing cost, and that will add to the ranks of businesses that earn just marginally to service their debts, sometimes called zombie companies. These zombie companies employ a lot of people. They produce goods and services the consumers want. By some measures, about 1/5 of the publicly traded corporations already fit this definition. Now, when they are earning and their profits go only to service the interest, would there be incentive to produce more or to diversify or to have more investment? No. So what looks to me is that the debt costs surging, more companies are likely to declare their bankruptcy. When they stop production and go bankrupt, the workers would become unemployed. So their food, medical, and housing would suffer. And then the cycle starts. They don't They don't have money to buy, so the other companies start falling down. And that would be a bigger tragedy than the Great Depression itself. And I'm amazed that the people are thinking of those issues which are not urgent. We need to look to important and urgent things. Protect the future of the people. Actually, it looks to me like the internet bubble. Even though there's a plenty of companies are making money, there are many more which are not making money and are thinking of folding up. No, tragedy is that people go by the Sensex, by the Nasdaq and others. But all those are misleading. For example, in India, Sensex is based on the results of about 18 companies. That's all. Out of the 10,000, 100,000 companies, or if 18 are the sample, and you base your complete economy on the basis of the figures of that, it's unworse. For example, worldwide, Moody's Analytics reckons the default rate, which they call speculative grade, that what the financial world would call junk. And according to them, this junk will double next year. In the $6.7 trillion market for high-grade US corporate bonds, there are signals that the defaults will be the worst in the last 5 decades. So the defaults of the last half a century would be less than the loss in 1 year, that's in 2003. The people will be celebrating New Year in New York or Adelaide or anywhere. Are they aware what they are in for? Now, the investors and the entrepreneurs are even more worried about Asia, where the dollar strength has made the dollar-dominated debt more expensive. The prices of the bonds issued by the real estate developers in Vietnam and Indonesia have become practically bankrupt. Defaults in China's properties sector are at record level. South Korea, the companies that built the local Legoland theme park missed a debt payment last month, and that has never happened. First time they had missed the payment. For the smaller businesses here in North America, which tend to borrow from the banks at the floating rate, the worst is yet to come. Then what will they lay off the workers as the Fed's rates peak early next year? I expect the rates to increase up again in January, again in March. And the first quarter, that's till the 31st of March, you would see more cracks, and these small businesses would start to see the pain of the high interest. So the world all around is drowning in debt. And governments in rich economies that borrow in their own currency generally don't face the kind of restraint. But the people in other countries do. So among the developed countries, Italian public debt worries the most. The government interest payments stack exceed 7% of the GDP. And by 2030, it will be unsustainable. USA, which prides itself to be the best economy in the world, is heading for political headache over debt. Now, the Republicans are going to take over the control of House of Representatives after a couple of days, and there is a potential for another market-roiling fight about raising the federal debt ceiling. So many developing countries are in the middle of sovereign debt crisis. Sri Lanka, Zambia have already defaulted. Egypt and Pakistan are not far off. And the International Monetary Fund estimates that more than half of the low-income countries are in debt distress. And then the borrowers have some sources to ward off the effects. Now, where will it end? Actual and expected increase in the central bank benchmark. Interest rates in the current rate hiking cycle. Expectations based on the market measures, except for South Korea, are not showing a rosy picture. But the extent of damage is likely to depend on how high central banks push the interest rates. If they keep on pushing it mindlessly, I pity the humanity. What we need is a quickish victory over inflation, or a decision to settle for prices that are somewhat above the target that will allow them to stop tightening further. It looks that the governments take the easy measure out. No, you have to tighten the retail market and the wholesale market, the housing market. Lay down the ceiling. It will not go beyond this price. Raising interest rate is not going to help. Controlling inflation is going to help. Before you get to the destination, you have to create or be prepared for a lot of damage to the economy and the financial market. So people who are thinking that the new year is going to be possibly the beginning of a new heaven are in for trouble. Pragmatic attitudes are required, and unfortunately the governments all over the globe are not pragmatic. They are penny wise, pound foolish. And for them the situation is that urgent is more important or more imperative than the important. The important thing is that the debt should be controlled. And the urgent thing is government says prices should come down by a couple of cents. Now, you have got to look after the important things, and urgent things will take care of themselves. That's the way we can hope to survive economically. Thank you.